Okay, great. So continue from the last and then section. We said that to go over the ratio number 5, the investor or the market position comprised of number of ratios that look at the investment potential of the organization or of the company. So the very first one on the list is the earnings per share. Is the earnings per share. And we said that the earnings per share is nothing by the antipart, that's the profit after tax, all divided by the number of shares. That's the profit after tax over number of shares. That's the earnings per share. Just give the shareholders an indication of future earnings. So that is it. Then number 2 is the dividend per share. That will be the total ordinary dividend, OD dividend, ordinary dividend over number of what shares. That is the formula. Total ordinary dividend over the number of shares. Okay. That's the for the shares, it must be ordinary shares, not preference shares. Ordinary shares. Then earnings yield. Here we said that anything yield is that item per share over the market price per share. Good. Anything yield is that item per share divided by the market price per share. So earnings yield will be earnings per share over the market price per share. We are done. That's the formula for earnings yield. So AMA yield will be AMA per share over the market price per share. That is AMA yield. Okay. Ajua yield is Ajua per share for the market price per share. So anything yield, something that you are yielding, you are giving, is the earnings is that item over the price, how much you paid for. And we said that we use it to assess whether the share price has been overvalued or undervalued. Normally use the earnings per share to determine that whether the share price has been under or overvalued. Okay. Then we move on to dividend yield. As usual, anything yield is that item per share. So dividend yield 2 will be dividend per share over market price per share. That is the formula for dividend yield. All these are the investor or market position ratios. If you want to assess your market position, use these ratios to assess that. Good. So that's the dividend yield. Then we quickly went through to the price earning ratio, PE ratio. PE ratio, normally, like this. PE ratio. Price earning ratio. Okay. Now let's see. The price earning ratio, as usual, price. So that one becomes the market price per share all over the earnings per share, or the market capitalization over the profit after tax. All of this will give us the same answer. So price over the earnings. So price over earnings. Price over earnings. That's the market price per share over the earnings. Either you use the total market value, that's the market capitalization, divided by the total profits after tax. So that's the price earning ratio. Now let's quickly look at the where we got to. And we said that the earnings yield and price earning ratio, one is the opposite. Is the inverse, not just the opposite, it's the inverse. If you turn the formula upside down, you get the other. Or you divide one by the other, you get the other one. Let's show it here. Earnings yield is earnings per share over market price per share. If I turn this formula upside down, I'll get what? P/E ratio. So P/E ratio is the market price per share over the earnings per share. Have you seen? These two formulas. So one look at the opposite of the other. Okay. Now let's continue the game. Now we move on to the dividend payout ratio. Here we said that this explains the proportion of the earnings being distributed as what? As dividend. The overall earnings earned or declared, or the profit after tax declared by the company. What is the proportion being distributed to the owners as the dividend? That's the dividend payout ratio. How do you calculate it? Relax. Just pick the dividend per share or divided by the market, the earnings per share. Dividend over the earnings per share, not packet. Or you take the total dividend or divided by the profits after tax. Please, the dividend we are interested in, it should be the ordinary dividend, not the preference dividend. It is the summation of the interim dividend and the final dividend declared for the year. Good. So that is it. And that is the dividend payout ratio. So that's the formula for dividend payout ratio. So the proportion of the earnings that you are paying back or distributing back to that of the owners, that gives rise to the dividend payout ratio. Now let's move on to the next section. We are going to look at what you call the dividend cover. So let's look at the dividend cover. Dividend cover. As the name suggests, dividend cover. That means it just explain or review the ability of the entity to pay dividend. So your strength, your capacity to declare dividend. So some company after declaring dividend, their capacity reduces. Will it affect our capacity? So dividend cover is like the strength that we have over dividend that we have declared. So the profit, or it will be equal to our profit available to pay dividend. That's profit after tax. All divided by the dividend declared or the dividend itself. So this will give us the dividend cover. We measure the answer in times, then we are done. Okay, so these are all the ratios that are in our field. These are the ratios that are in our field. In fact, these ratios are summary. There are many. They are more than what we've gone through. They are more. But for the purpose of your examination, we have to even concentrate on this. And even this one, we are going to do what? Look at do selection. And then you are done. So on that note, okay, let's pick a question and then do some calculation, right? Yeah. So I'll back with the calculation. I nearly ended it, but I'll back with what? Calculation. So let's back with what calculation. I'll still use the question that we are solving, but use the question one, Obia, to calculate all these ratios for me. So you are going to use Obia, question one, to calculate, but we are going to still continue our question. Peace Limited. We are still at Peace Limited. I may insert some figures because we don't have all of this item. Okay. I think I will use Obia. So I will use the question called Obia, and that's the question one. So let's go back to Obia, and I will use Obia to do the calculation. Obia. Where is Obia? Okay, so Obia is here. We are calculating all the investor or the market position ratio. I am not going to go by what they have here. We are going to do our own calculation for all the 7 that I wrote on the board. We're going to calculate all this good from that particular question. Because now we are learning how to do the calculation. Right after this, we start the interpretation, and that's the end of ratio. And that's the end of ratio. Okay. So Obia. Obia. Okay, Obia. So let's go straight. Exceptional item note 2. So dividend. Have you seen the dividend? Interim dividend is 60. Final dividend is 30. What we are interested in is dividend 90, not the breakdown. So they'll give us a profit and loss account. So they give us a profit and loss account for the year ended September 2017. That is the profit and loss account for September 20. Now, these ratios given to us is the sector average ratios of the sector companies for the period of 30th September 2017. This one is for their industrial average. The company that they are operating, this is their industrial average. Good. So okay. So the financial position too is given for that year, September 2017. And then the notes, all of them are there. They said the exceptional item related to loss on sale of what? Batch of computers. They sold computers. And they had loss. Okay. The share required. Calculate the ratios. No, we are on the share price. They have given us the carrying amount. The note 1 talks about the non-current assets, carrying amount, and then the cost and then accumulated depreciation. Note 2 talks about the exceptional item which relate to loss of sale of badges. a batch of computers that had become worthless due to improvement in the microchip design. Then note 3, very important. The market price of Obia's shares throughout the year averaged 6 Ghana cedis each. Required. Calculate the ratios for Obia equivalent to those provided by the interfirm comparison 10 marks. Here we are going to use this information to calculate all these ratios. I am interested in just the formulas. I am done. How to pick the figures correctly. Then after that, we look at the interpretation. Okay. Okay, now let's look at this. So, yeah, the ratio is only 1 year. So we'll start the game. First one, earnings per share. Earnings per share. So I tell the examiner that I'm calculating ratios. Yes. So calculation of ratios. So first, in fact, don't go to here the ratio will come here. The formula will be here. And then 2017 will be here. Then the sector average, industrial average will also be here. We are going to calculate all the ratios, all the investor ratios, because that's where we are now. Number 1 on the list, earnings per share, is equal to the profit after tax over number of shares. So I'll go to the question and look at profit after tax. Obia, where's your profit after tax? So let's go to Obia straight. Profit for the period is 96,000. I'll take it. What's the number of shares? Go to the financial statement. Ordinary shares, 25 pesos each. So how many shares will be in issue? So here, if our ordinary share capital is 25 pesos, so that's 25p each. And now we are getting, let's say, 200. So how many shares? So let's assume that it's 200,000. So the question is this. We have some number of shares. When you multiply by 25 pesos, we get 200,000 shares. What is the number? That's all. So basically, it will be like this. You need to click this 200,000, the value divided by this price, the 0.25, to give you the number of shares. We are done. Okay. So basically, to get the number of shares, take the nominal value of the shares and then divide it by the nominal price. Of a share, then you are done. Okay. So with this question, the number of shares will be, pick the 150,000 and divide it by 25 pesos. So that's the number of shares. So 150,000 divided by 25 pesos will give us the number of shares. So 150,000 Ghana cedis divided by 0.25 per share. And now give us good. So that means this company, Obia, the number of shares is what? 600,000 shares. 600,000 shares. That is it. You need to show how we got the 600,000 shares. So the profit after tax is 96. So that you write 96 like this all over the 600, or you write 96,000 all over 600,000. Basically the same. You cannot do anything. But don't forget that this 96, they break 3 zeros. So if you can also use the 150, meaning you cancel 3 zeros, divide by 0.25, it will give you 600. So that means when you go by this approach, then we have this one in there. If you select the very first one, all of them will give us the same answer. Good. If you don't have the calculation of the 600, can you show the working, how you got the 600? So something like this, is bracket 150 divided by what? 0.25. And this one give us, so 96 divided by 600. Ghana city of 0. So 96 divided by 600, 0.16 per share. We are done. That's number 1. So basically, but this is, if I don't have this piece much, no go there. Okay, number 2. Dividend per share is equal to total dividend R divided by number of what? Shares. And we know the number of shares to be what? 600,000. All what you need to do is go and pick the dividend. Let's go and pick the dividend. Total dividend. Yeah, when they try to confuse us and say, okay, interim dividend and final dividend. Every dividend be dividend, right? Just put all of them together. But here it must be the dividend on ordinary shares. We don't need preference dividend. For instance, if you go to question number 8, let's go there. Peace Limited, question 8. Good, the question that we were solving. Have you seen the dividend here? Dividend, preference shares, 10,000. Ordinary shares, 12,000. Don't say that because in the formula, we said that it's total dividend. So that one needs to be the preference dividend plus the ordinary dividend. No. It's not preference dividend plus the ordinary dividend. No, it's not that one. Total means all the dividends declared or paid during the year. From the very first day to the very last day of the year, what's the total dividend you've declared? You know, some of the dividend, you declare them small, or first interim, first half, second half, like this particular question. So you pick the total dividend. So here, we are not going to touch the preference dividend. So let's go back to our question that we are solving. So when it comes to the question that we were solving, the dividend paid was 90. So I'll pick the 90. I'll forget about the interim or the final. I need the total of the two. So that's what we mean by the total. So 90,000 to 90 divided by number of shares. Number of shares will be 600 shares. So what is the dividend per share? So dividend per share will be 90 divided by 600. And that'll give us 15 pesos. I like that too. 15 pesos. So 0.15. So 0.15. Ghana city of 0.15 per share. Have you seen? I like the narration. I'm done with the dividend per share. So you are done with the per share people. Let's also go to the year people. Some more. So earnings yield. Number 3 will be earnings yield. No shortcut in exams. Earnings yield. Earnings yield is nothing by what? Then the anything yield is that item over market price per share. So AMA yield, AMA per share over market price per share. So earnings yield will be what? Earnings per share over market price per share. So we know the earnings per share here. What's the earnings per share? Earnings per share, why? The first one, that's 0.16. So I'll write it first before I forgot. Then I'll go to the question. I'm going to pick the market price per share. So let's go and pick the market price per share in the first. Market price per share. I think it was 60 days or so. That'll be note 3. Note 3. Note 3 says that the market price of OBS share throughout the year average 60 days. You have to pick the average market price per share. If they're giving you the open and then the closing, pick the two and get the average. Find the average of it. So the average market price is 6 Ghana cedis divided by 6. What is the earnings yield? Some multiplied by percentage. Some leave it like that. So we are going to leave it like that. That is the earnings yield. Normally, you look at how the examiner calculated its own and then you provide equivalent. So have you seen the dividend yield? They have put it in percentage, right? So that means you can also get a percentage version. Okay, so that's very good. So that's 0.0026 and 0.03. I'll take that. So we can express our own Q as what percentage, the yield. You can multiply by 100 or you can leave the answer like that. 2 ways. Just look at how the examiner calculated his own and just provide equivalent. Don't mislead the examiner. No. So here too, let's provide it in percentage. So that will be 2.6%. 2.6%. So that's the earnings yield. So the actual yield is 2.6%. That's the actual yield. Yes, because I pay 6 Ghana cedis, you are giving me 16 pesos. Ha! It's 2.7, right? Okay. 2.7%. I pay 6 Ghana cedis, but the earnings that I'm getting is what? 16 pesos. Oh, then my yield will be what? Like yield is like a return that the shareholders they are getting. They pay 6 Ghana cedis for each shares, and you are giving them 16 pesos. Oh, so they are yielding what? Later. You can also leave the answer just in number figures. Now let's go to number 4. Or the yield, dividend yield. So dividend yield. Dividend yield will be as usual. Anything yield is that item per share divided by the market price per share. So dividend yield, please let me market this one first. Dividend yield is nothing by a dividend per share over the market price per share. Probably times 100. Good. What's the dividend per share? We have it here. Dividend per share is Ghana cedi of 0.15 or divided by the market price per share of 6 Ghana cedis times 100, right? Because we want to probably express our answer in percentage because it's too small. So this will give us 0.15 divided by 6 Ghana cedis. So that's 2.5%. Wow. The dividend yield is 2.5%. Don't forget that we are testing ourselves on the calculation of the ratios. Good. On all the possible ratios, all of them. So far, this is where we are now. Okay. There are about 23 ratios, but there are more than 23. Over 30, 40 ratios, but 23 are highly examinable. Out of them, we still do selection. Can't do all of them. Okay. Now let's continue the game. The game is getting interesting. So now we are done with the yield 2. We are done with the yield. Let's go to the PE ratio. PE ratio. Price earning ratio. Oh. Right. Right. Okay. So PE ratio number 5. Don't be numbing them more. PE ratio is equal to the market price per share over earnings per share. So over here, what is the market price per share? What is the market price per share? So market price per share of 60 Ghana cedis given to us. What is the earnings per share? Earnings per share, Is it here? This one. Good. So that's 0.16. 0.16 Ghana cedis. Yeah, the answer is not multiplied by anything. Normally, we express it in times, or we just leave the answer like that. So what is the answer? We leave it like that. Or you can also express in times. Price earning ratio, PE ratio. So 6 divided by 0.16. That will give us over. Great. So that will be 6 divided by 0.16. That's 37.5. I like that too. 37.5. We are done. Perfect. 37.5. So that's the PE ratio. 2 more, then we are done. 2 more. 2 more ratios. Then we are done with the market position. Today, we are learning how to calculate them. Please, the formulas, that's where my interest is. So far, starting from the very first lecture to today, we are just learning how to calculate the ratios. Okay. Now let's calculate the next two. We call it dividend payout ratio. Proportion of the earnings distributed as what? As dividend. That's all. So payout ratio. So it's like, what are the percentage of your salary that you are investing or you are taking home? No, you can take huge, but take home money sometimes little. After they deduct everything from it, your investment, everything, your savings, they take home. Yes. So payout ratio, dividend payout ratio. That's the next one I'm going to calculate. I'll put it here. Payout ratio. So dividend payout ratio, number 6. Dividend payout ratio is equal to dividend per share over the market price per share. Sorry, not the market price, but the earnings per share times 100. We are done. There's an alternative formula. I'll use the alternative formula too. What is the dividend per share? Dividend per share is here, 0.15, all divided by earnings per share. Earnings per share is 0.16. We calculated out the number one that we calculated. So 0.16, that's the earnings per share times. So that means you had earnings of, it means that you had earnings of 15 pesos. Sorry, 16 pesos, but you paid out 15 pesos. So that means you are retaining 10 pesos. Good. So that's giving us 93.75%. That means you nearly paid all the earnings as what dividend. Can you imagine? You've had earnings of 16 pesos, and you paid 15 out of it as what? As dividend. That means you paid more, almost all. Let me just 1 peso. Okay. Then you declared all of them. Alternative formula is nothing but, obviously the national average, I've not provided there. The national average, they give it to us. So you can be putting them in. Not all of them will have a national average because this question, we are calculating all of them. And they don't have all of them on the question, on the list. So that is it. Now, alternative approach is the total dividend. Total dividend divided by the profit after tax. Right. So what the total dividend is 90 divided by profit after tax 96 times 100. It should give us the same 93.75. Alternative approach for the payout ratio. Alternative approach for payout ratio. Okay, now let's continue the game. Let me do the last item and then we are done. The last item is the dividend cover. Dividend what? Cover. Dividend cover. We measured it in times. Dividend cover. Normally measured in times. So number 7 on the list. Dividend cover. The first formula will be the profit after tax all divided by the dividend. It's the inverse of this. If I let me use the second approach, it's far easy. That one is the opposite. These two guys, they are the inverse. Here is the earnings per share over the dividend per share. What's the earnings per share? 0.16 over dividend per share, 0.15. The answer is in times. You multiply the answer by what? Times. So that will give us 1 point. And then we look at the alternative. Okay, so what do you get? 0.16 divided by 0.15. So 16 divided by 15. That's 1.07 times. So that means the profit that you have made can calculate the, or can pay the dividend how many times? 1.07 or 1.067 times. Alternative approach is nothing by the one I wrote first. The profit after tax all over the total dividend. What's the profit after tax? 96. Total dividend 90. You must give her the same answer. 1.067 7. We are done. So that's the end of the game. That's the end of the ratio calculation. Please and please again, I'm going to do something. And that one is very important. Good. Okay. Can we continue the game? So here we just have to use one of them as. Now what we are going to do is the most I won't say the important thing. It's something that you need most to avoid trouble in exam. So your exam question can sometimes be open. Your exam question can sometimes be restricted. So these are only 2 questions you're going to meet. Open questions and restricted questions. The restricted question, you have no choice. You have to answer it. Open question, freely come out with the one that you want or the one that you like, the one that coming from your interest. Then you solve it first. So take note. Example. Let me provide a critical example. So let's go through this question. Some of the exam questions, we will just ask you to write the report. We start to know, write the report. By what ratio? Select it by yourself. How do I select the ratios? Do I select all these ratios I've calculated? No, you don't do that. So we have the restricted and open question, just open-ended. So A. Then B, open. The open question, that one, that's what we are going to look at it now, how to tackle them. Restricted, you have no choice than to go extra. They've asked you to analyze just the profitability, and you're talking about liquidity. You are restricted to profitability. And even profitability, they've asked you to do only 2 ratios, and you're talking about 3. So how to tackle open questions? Let's back it with what? Illustration. So let's go to our past questions. If you check OBIA is a restricted question. You are restricted to the ratios in here. So you can see clearly that in OBIA, first thing we asked was calculate the ratios for OBIA to those provided equivalent. I like the word, I didn't say equivalent. Calculate the ratios for OBIA equivalent to those provided. So you are restricted to calculate just what you see here. 8 versions. So for instance, return on capital employed, ROCE, have to calculate. Net asset turnover, calculate. Gross profit margin, calculate. Net profit before tax margin, calculate. That is the operating profit margin. Then inventory holding period, account receivable, collection, all of them. And then we are what? Dividend yield, dividend cover, all of them. Debt to equity. So here you are restricted to these ratios. Such questions are not all that difficult, just that if you don't know, you don't know. So that's why we have calculated all the ratios. Now let's go down again to that of Zangi or Fadama. If we go to a question like Fadama Limited, you are not restricted though. Anything goes. We just ask you to Write a report on the profitability, working capital management. You are done. So are you going to calculate all the profitability ratio? No way. There must be a strategy for it. Previously, we are just learning how to calculate all the ratios because sometimes the examiner will ask you to calculate some specific ratios. That's why you should know all the ratios first before you do area of specialization. That's why you have the core subject and you have the elective maths or electives. Your core and your electives, everything. So first you should know everything first before you start measuring in some area. Okay, so now let's continue the game. But if you come to diamond and shine, it's not like that. Diamond and shine, when you come there, it's not like that. Diamond and shine, it's not like that. You are restricted. The following are the latest industrial average. So 10 ratios. You are restricted to these 10 ratios. You are done. That's diamond and shine. Before you go ahead to provide the interpretation. Right. So this is the sort of question you're going to meet in the exams. You meet restricted questions. Good. So you'll be restricted. And then you meet open questions. So all of them, how do you go by them? You're going to look at it. And that's a critical section. So first, please know how to calculate all the ratios. So go back again. All what you've calculated, go through them. Make sure that all the formulas, you get them right. Good. Now, there's a question here. If you go to Fadama, they ask us to explain the profitability and the working capital management. Working capital management talks about the efficiency ratios. The first 4 efficiency ratios that we did, that's working capital management. Inventory days, receivable days, payable days, cash operating cycle, or net working capital cycle. That's the working capital management. So you need just profitability and the working capital management. And then it also includes the liquidity ratios. You can combine the liquidity ratios. Okay, that's very good. Okay, so I hope you get a difference, right? Now let's go to the board and do the important analysis. If the question is open, you are not restricted as to the number of ratio. Then let's see. First, this chart must be part and part of you. So ratio. So I write here the key ratio. Key ratio. There are only 5 then. The 5 key ratios. I write here number. So far, what we have per the note, per what you've done. Please, honestly speaking, the ratios that we have calculated, they are more than that. They are more ratio than what you've done. What we have done is a summary of them, summary. And what you should do. So, what you should calculate. So, this is the number that we have. And here, it should be in the exams. For exams, what you must calculate. So, exam purposes. You don't have the whole day for yourself to do all this ratio calculation. No. But the question is, then why do we go through all of them? We went through all of them because sometimes the examiner might restrict you. That I need this set of ratio. I am done. So when I pick profitability, the first ratio on the list So let me extend it there so that you will click. So the key ratios. If you pick profitability, so far we have how many ratios? Five ratios that we have calculated. Starting from where? Gross profit margin, operating profit margin, net profit margin, return on capital employed, and return on equity. Return on equity. You need only maximum of 2. So for exam purposes, measure the 2. If I should select for you, I will select operating profit margin and then the ROCE. So the 2 that you have to select are operating profit margin and what? The ROCE. If I should select for you. See, this section is very important. You don't have the whole day for yourself for you to go and calculate all the ratios. If you know how to write a good report, it's not the plenty ratios that will make the report look nice. No. Leave some of the point for your friends to also say so that we mark it for them. Don't write all the points. So if there are 5, you write 2. Somebody also choose another different 2. Someone also choose different 2. So they'll be choosing different. You alone want to talk about all the 4. Why? All the 5. Why? It doesn't for you alone. Is it for you alone? So select 2. Or do you have the whole day for yourself? Is that the only question you are going to solve? Or is that the only question that you are sure that will come in exams? Yeah, that was profitability ratio. Then we go to 1, liquidity. This is OP. You are not restricted in all material respects. Liquidity ratios. We saw only 2. Calculate all the 2 for us. The current ratio and the quick ratio. Then we go to number 3, activity ratios. Activity or the efficiency ratios. Over there we saw many. We saw the first 4 and then the last one. So we saw 5. There are 5 in number. The days, inventory days, receivable days, payable days, and net operating cycle or cash conversion cycle, plus net asset turnover. Yeah, because there are many. Maximum apex of 3. In fact, you can go by the 2. Can go by the 2 rule. Oh, 2. Calculate just 2. You are done. Because here there are many. 2. So here, let me write them by 2. I'll go by the 2. Don't write plenty of 2. Or 3 maximum. But I like the 2. Then you calculate 3. I'll explain in a situation where you need 3, a situation where you need 2. Number 4. Number 4, we look at the gearing, right? Gearing, we saw 4 ratios. In fact, the ratios are more than 4 and the gearing. You need only 2. Only. If you are not restricted. You go to investor or market position, number 5. Investor ratio or market position. Yeah, that's what we just calculated. You saw 7, right? But there are more than 7. Here, you need 2. Just pick 2 when it's open. In fact, in a situation where the examiner did not restrict you at all, or there's no restrictions on the number or the aspects, normally you can't talk about all the 5. No, you can't do that. You can't talk about all these 5. So that one you have to also restrict yourself again. Take off investor ratio. So in a situation where You were not restricted in all material respects. Take off investor ratio. So left only 4. Talk about 4. You don't have the whole day for yourself. You only have 30 to 36 minutes for this ratio question. So in all, if you are going to end here, then you need ratios of 1, 2, 3, 4, 8 ratios. If here is going to be 3, then it will be what? 9 ratios. If you are going to talk about investor, it will be 11. In all, you need maximum of 10 ratios. Maximum apex. You need from 7 up to 10 ratios. Good. Meanwhile, if you sum all up here, all the ratio that we know, all the ratio that we've calculated, we have what? 5 plus 2, 7, 12, 16, and 23 ratio. Wow. That's all. Yes, 23 ratios. Out of these 23, we need maximum of 10. So that means 13. So, but the issue is this. Before you go and sit for the exam, make sure that these 23 ratios, you know the formula is correct. How to calculate them, because you may be restricted. You may be restricted. And I've walked you through several sections and several restrictions. For instance, this. Here you are doing only profitability and working capital management. So look at this question. It's open. Fadama Limited is open. But it's just like it's open restricted though. It's not too open. They say we should just calculate profitability and working capital management. Only 2, right? So profitability. So here profitability. I'll do here. If I do my best to, okay, I'll do my best to. Now the working capital combines liquidity and efficiency. It combines liquidity and efficiency. So I'll do 2, 2, 2 here, making 6 ratios. I'm done. That's all. I will do 6 ratios. So I'll calculate 6 ratios for 2 years, making 12. It's enough. In fact, if you like, go and calculate 30 ratios. If the max is 5, it's 5. It's 7, it's 7. It's not like it vary. No, the max is fixed. If you get our number from it, we are done. The rest, it's just like sin, right? Do correction. So take note. So Fadama, for instance, profitability and working capital management. Profitability, I'll pick 2. These 2 combined give us the working capital management. Even the net asset is not bad. So first, over here, I'll pick all the 2. So let's assume that here, I'm even adding, I'm selecting 3 over here. If I select 3 over here, I'll get what? 7 ratios. I'm done. So 7 for each of the years. That's all. That is all. Each of the years. So 2016, 2017, I'll take for each of the years, and that's all. We are done with the calculation. And then the second part of the ratio. Okay. Good. So let's go to question 10. Question 10, for instance, AMA and then AMAFIC. So 2017, right? Good. Let's see whether it was the restricted type. So this is the return on shareholders' capital employed. That's 5%. Sorry, the arrangement has scattered. So I think I'll read it for you. If you have the hard copy, then you can make these 3 corrections. Return on shareholders' capital employed is 5. It should be 15% though. It should 15%. Yeah, that is 15%. Okay, let me do something here. Okay, let me read it out. So return on shareholders' capital employed. Shareholders' capital employed, 15%. So how do you calculate this? Shareholders' capital employed, 15%. Current ratio, 2:1. Debt to equity ratio, 35.5%. Earnings per share, 1,800 cedis per share. That's all. Then the note 2. The share capital of each company is made up of 20,000 ordinary shares of no par value. The market price per share of AMA and Africa is what? 4,400 Ghana cedis and 5,000 cedis respectively. Now look at the question. As a financial analyst of Ghana Association of Industries, prepare a memorandum memo to the executive secretary comparing the performance of the two companies with each other and with the industrial data. So that is it. Good. So here you will calculate the equivalent ratios. You have to calculate the equivalent ratios and then you start the interpretation. You start with your report, then you are done. So here you are only restricted to the ratios given. That's all. So your interpretation must be based on just these ratios. So just these ratios. So that means if you are the one sitting and these ratios, you are not familiar with them, return on shareholders' capital that they've employed. And then the current ratio, and debt to equity, the earnings per share. Return on shareholders' capital employed is the same as what? Return on equity or return on shareholders' fund. So that's the ROI. Good. So basically, that is the game. Okay, so we are done with the calculation and then the selection of the ratios. If you do have any questions, suggestions, can you let me know before we move on to the next level. Please and please again, it's not an exam room. At that critical condition that you are coming to make a decision. Profitability which of the two should I talk about? No, please. Right now select your best two. You know all of them, but there's some two bit there you are best. So go to past question, abscond to the most important ones, the operating profit margin, and then the receipt. The return on capital employed, that's the one that we normally ask. So you can go through the past questions to look for those that the examiners like asking it. You go to automatic, like it that way. So that when they ask, you are fine. So liquidity, select your two. Activity, select your two. Select it now, not the exams day, and practice more before the exams. If you go, you are restricted, go by the restrictions. If you are not restricted, you just let your best interest, then you move on. Then you are done. Okay, on that note, we are done with the calculation of the ratios. Still, my question is still pending. This particular question is still what? Pending. This particular question, question number 3, diamond and shine. Question 3, diamond and shine is still pending. Question number 3, kindly calculate all the ratios. Just forget about the requirement here that this equivalent ratio. No, go beyond that. All the profitability ratios, they are calculating all of them just for calculation's sake. I'm begging you. So calculate all profitability, calculate all the 5, liquidity 5, activity 5, gearing 4, investor 7. In all, when you are done, then take another sheet. Select your best two from each. 2, 2, 2, 2, 2. You are done. That's all. Okay, so if you do that, then you'll be fine. Now let's go to the last section of the ratio. The last section of the ratio. That's the interpretation. The interpretation. Let's start with the report writing or the actual interpretation. So first, know how to calculate. So now I'm assuming that based on what you've done and based on what you are going to do, you are okay, or you are fine. Let me say you are fine, not you will be fine. You are fine with the calculation of the ratios. So after you've calculated the ratios, how do you then write the report or do the analysis or do the interpretation? That's where the chunk of the mark will be. But for the calculation alone, you can just score there. So first, the report will be in the following form or the interpretation. A, B, C, D. You can ask you to write a report, right? A memorandum, memo, right? Briefing paper, right? Explanatory notes. Explanatory notes. So always kindly read the requirements carefully. Your ratio question require you to use any of this approach. Okay, please, each of them have its own structure or its own format that you have to follow. I'm begging you. Each of them have its own format. Report, memo, briefing paper, explanatory notes, and then sometimes commentary. Can ask you to comment on the performance, just commentary. Just commentary. Then you are done. All of them have its own format. I'll look at these two. That's all. The rest, they're not other challenge. So let's look at reports. I'll look at report first. Report. Please, the format is very important. Report. The format is very important. So we can ask you to write a report analyzing the performance of the company. So report writing. If it's a report, how do you start from? Now all reports must have address and memo too must have address. Both the writer's address and the recipient's address. So in the exam question, they will address you. So the address must be like this. 2, you start at the left corner top of your answer booklet. You write the report on top like this. Nicely. 2, who am I writing the report to? The recipient. Then 2, from. Then date. Subject. That's all. So this is the report. This is what the report, the address. So 2, write the report to the board of directors or write a report to the credit control manager. Write a report to the CEO, the managing director. So they'll give you the recipient. So let's pick maybe a particular question to look at the. So any question at all? So let's look at any question at all. Let's see how we were addressed from the writer. So the writer, sometimes they will address you. If they don't address you, please address yourself. Oh yes. And the best address is your name. Just put your name there. They don't address you, put your name there because you're the one writing the report. So this one said, write a report. They didn't give us the to, they didn't give us the from, so you address yourself to the company. So that is it. If you go to down there, let's check Fadama or Zangi. This one is Obia. This one is the Diamond and Shine. As the financial controller of Shine Limited, if address you are the financial controller, bam, nobody will take it from you. Write a report to the managing director. So here, taking this for instance, to the managing director. Of who? Maybe Shine Limited, put it there. From financial controller. Well done. Financial controller. Okay, so that is it. Now let's continue the game. The address is very important. Date, please. The date of the examination. So in fact, you have to start all from now to write the exams. Kindly be using that date, the day you are going to write the exams, so that it will not escape you. Oh yes, it can sometimes escape you. So 12th of January. Everything. 2020. Submit comma here, stop there. Good. Or I can just write 12 January. No shortcut to. They are begging you. 2020, no punctuation. Please. 2021 and please again. 2021. Not 2020. Now, the issue is that we don't want this stuff. So this is not an official date format, please. An official report, these dates are not accepted. Even sometimes, have you seen this one? You write it 12 like this. The TH will come down. Then you write it like this. 12 and put it, already carry it like this. Have you seen? This is a computer writing. Yes, it's a computer writing. So, you want to do this. Step him down. Step him down. Then that's all. Step him down. So let's try to step him down. Or if you don't want trouble, don't even bring that in it at all. Oh yes, go by this approach. And no shortcut it. You can go by this approach. No, January 12th. So 12th January. No shortcut to 2021. Why do I like writing 2020 like that? You are done. Okay, now let's move on. Subject. Just summarize. Summarize the requirements in a short sentence. So here the examiner said, let's go to the ratios. So let's go Let me project the requirement. Just summarize the requirement there. That's all. Either analysis or performance analysis of this. You are done. You say that analyzing the performance of your company, who you are assigned, comparing to the result of what? That of Diamond. So analysis of what? Of the performance of Shine and Diamond. That's all. You summarize it. So analysis of the performance of Diamond and Shine. That is all. Maybe for the year ended. For the year ended. And then you put it there. Please summarize it. So do something like this. The subject are done like this. Analysis. Analysis of the performance of who? Performance of Shine Limited and Diamond Limited as compared to the industrial average for the year ended 31st December 2017. You are done. Something simple. Cut it short and brief. No religious terms. We are begging you. Okay. Oh, that's why I wasn't coming. Okay. So that's the first section. Right after the address, go straight to that of the introduction. Please, your introduction must be brief, catchy. It must entice the examiner, the reader. It must also be brief, because the chunk of the mark is not out there, it's at the bottom. So how do you write the introduction? Brief one. So let's go to the introduction. So right after this, leave some 2 spaces. Start with your introduction. So let me start with my introduction. Now, when we start with the introduction, maximum of 3 sentences. Maximum of 3 sentences. So 3 sentences approach. Sentence number 1, sentence number 2, sentence number 3. In one paragraph, 3 sentences in one paragraph. Good. This, so introduction, 3 sentences. It must be just 3. First sentence, second sentence, third sentence. First sentence, tell us the purpose of your report. Your purpose and the reason. The purpose or the reason. Or the reason. In fact, the reader is aware why you're writing the report. Now, purpose or the reason. And then in the same sentence, you can also tell us the decision. The same sentence, you can also tell us exceptional item. So exceptional item. You don't need to have all this. Some questions does not have exceptional item. Some questions does. So take note. The main idea is your first sentence. Tell us the reason or the purpose of this report. Even though we are aware that you are writing the report to explain or analyze their performance, tell us. For instance, assuming that your boss, the MD, have called you to his office, and the MD is looking for some explanation, and you start to know, oh, the ratio, performance, they've done what, they did this. What are you talking about? Introduce, oh, boss, I am here today, not because of anything. I'm here to explain the performance of our company or performance of our ratios or our analysis to you. And I'll make some proposals or decisions based on the performance. I'm done. That's the first sentence. I've informed you the reason that I walked straight to your office or I entered the office. I didn't come there to just come and say hi. No, I came there to come and explain the performance of the company to you. I'm done. So I have to introduce you and tell you that this is what I'm come to do. If you're interested or you are ready, go ahead and allow me. Oh, sorry, it's not the right time to do this. Can we do it maybe another day? Another day too, I'll come. Start with introduction. Oh, sorry, let's do another day again in that order. So sentence number one talks about the purpose. Very brief, just one sentence. Sentence number two, tell us the type of analysis that you are doing. Very important, extremely important. Type of analysis versus type of ratios. Type of ratios. So the type of analysis you are doing and the type of ratios you are going to talk about. Very important. Sentence number two. Sentence number two. Tell us. Now, the type of analysis that you are going to do, there are two types of analysis basically. In the question, either you are going to do what you call trend analysis or intercompany comparison. Type of the analysis, number one and number two. Number one is the trend analysis or the horizontal. The horizontal analysis. So trend analysis. With the trend analysis, you are comparing the same company but over time. So company A 2017, company A 2016, the same company, current year and previous year, or even 2015, or even 2014. Yes, possible. That is trend analysis. You can also have what you call intercompany comparison. Company A versus company B, or sometimes versus company C, three companies. So tell us in the second sentence, oh boss, this performance analysis is solely about our company. Now, after you've introduced yourself, what I come to do to your boss, you just knock in there. Boss, I'm in to explain some various performance reviewed by the ratios to you for the current year. Good. Then you tell your boss the type of analysis. About this report is based on what? Intercompany comparison. We are performing, so we are comparing our performance to that of the key competitor in the industry and see who is doing well. How do you get it? So the type, so you tell the examiner that, oh, this report will be based on what? Trend analysis. I'm done. Or this report will be based on intercompany comparison. I'm done. It will be one. Definitely your question will be always one. Either trend or intercompany comparison. Sometimes they'll give you the industrial average. So trend analysis then get out the sector averages. Then the same sentences, the latter part should explain or tell us the ratio that you're going to talk about, the type of ratio, the key ratios. Boss, this analysis will be based on intercompany comparison using the following key ratios. The ratios are many, not all of them are going to talk about. Tell us the one that you're going to talk about. If you were restricted, just copy those that they restricted you, copy them in. If it is open question, then come out on your own and give us what you're going to talk about. So to go like this. This report will be based on intercompany comparison between what? Company A and company B, using the following key ratios. Then you start profitability, liquidity, efficiency, and gearing ratio. You are done. Servicing, attend to the type. If there's any exception item, it must be part of the first sentence. Or it can also bring us in a sentence. Then you go to sentence number 3. Sentence number 3. So let me take the sentence number 3 again. This report will be based on intercompany comparison between company A and company B for 2017 financial year, using the following key ratios: profitability, liquidity, efficiency, and gearing or solvency ratio, together with the industrial or sector averages made available. Have you seen? I've made reference if there's sector average in a question. If there's a sector average given to you in a question, together with what? The sector average provided. I am done. I've informed you what I'm going to talk about. I've informed you the type, because there are so many types of analysis that someone can conclude from this. I'm done. The last one, number 3. Number 3, tell us at least one, not 2. We are not asking for 2, or we are not asking for 4. We are not asking for 2. No, we are not asking for 4. We are just asking for 1. Just one item, 1. Tell us one limitation of your analysis. One limitation. At least tell us one limitation of your analysis. Limitation. One. One limitation of your analysis. At least one. The least one must be 1. Don't get right plenty. Maximum, like 2. That's all. So limitation 1. So tell the examiner that our boss, I'll still use boss because I'm in front of the boss. Boss, this report is limited to selection and application of different accounting policies by the company. Have you seen? If it is intercompany comparison, tell the examiner that the limitation will be selection of what? Different accounting policy. If these two companies all of them are using different accounting policy, then it means that your conclusion will not be on common base. Yes. What if it's trend analysis? Tell the examiner that the same point, my analysis is limited to changes in accounting policy over the period. So if there's change any of the accounting policy, it will render my analysis or my interpretation invalid. That's all. This is the introduction. You are done. That is the introduction of your report. So the introduction part of the report should cover this up to this point, and that's all. So now let me come on the comprehensive one. So I'll start. As requested, this report seeks to analyze the financial performance of Shine Limited as compared to Diamond and the sector average for 2017 financial year. Full stop. I'm done. I'll go ahead. That's sentence number 1. Now, sometimes decision. What do you mean by decision? Sometimes the person asking you is an investor. Investor have asked you to provide analysis so that you make a decision whether to invest in diamond or invest in shine. So that one, your introduction to reflect that. Tell us something about it that no, this report, at the end of the day, I'll make a decision. I'll decide or I'll make a proposal based on my analysis. So the decision tree must also be captured in the introduction to draw the reader attention that in the conclusion there, you go make their decision. Good. So that the reader will be so interested to see your conclusion. What's your decision? Amazing. So take note. So how do you reflect that? So still, this report, as requested, or per our trivial discussion, this report seeks to analyze the performance of Shine Limited as compared to Diamond Limited and the sector average for 2017 financial year, and recommend which of the entity to invest in. And recommend which of the entity to invest in. I've informed you what I'm coming to do. I'm going to analyze the performance. 1, 2. Make a decision. I'm done. All of them. First sentence. Sentence number 2 in the same paragraph. The report will be based on intercompany comparison, or the analysis will be based on intercompany comparison, or the company comparison between Diamond and Shine for 2017 financial year using the following key ratios. Number 1, profitability. Number 2, liquidity. 3, efficiency and solvency, together with the industrial average provided or make available. This will be explained in the subsequent paragraphs. Full stop. Sentence number 3. My analysis or the analysis is limited to selection and application of what different accounting policy. I'm done. That's the introduction. Nice one. Then you go to the report. Unfortunately for us, this is how far the good Lord will bring us. So on that note, we will end here, and then in the subsequent lectures, we will look at the body itself, what goes into the body. Good. Don't forget, if it is memo, the format is a bit, you just change the first 2. Yes, I'll look at memo, in fact, in the subsequent meetings. So that is the end.